The first homebuyer scheme introduced to help young people enter the property market seems to have had the opposite effect.
First home buyers are flooding back into New Zealand's property market in numbers we haven't seen since November last year. In October 2025, 2,765 first home buyers took out mortgages, the third consecutive month of increases. They're paying more for homes, borrowing bigger amounts, and making up nearly 25% of all property purchases. That's well above the historical average of 21 to 22%. But here's what makes this story absolutely fascinating. They're doing this whilst house prices are still down 15% from the 2021 peak in nominal terms, and a staggering 31.3% down in real inflation-adjusted terms. This is New Zealand's biggest house price crash in modern history, so the question every property watcher is asking: are first home buyers the canaries in the coal mine, signalling that the market has finally bottomed? Or are they catching a falling knife? The data tells a compelling story. The average price first home buyers are paying has risen for 3 consecutive months, from $654,601 in July to $673,349 in October. That's still down almost $44,000 from the record average of $717,724 they paid in April 2022. But the trajectory is clearly upward. Their mortgage sizes are rising too. The average mortgage approved to first home buyers increased from $547,813 in July to $565,280 in October. Again, that's below the May 2022 peak of $595,398, but it's climbing steadily, and they're getting older. According to a Cotality Westpac report, the average age of first home buyers has jumped to approximately 36 years old nationally, up from 34 in 2019. In Auckland, they're 37. These aren't starry-eyed young couples anymore. These are strategic buyers with established careers, higher incomes, and bigger deposits. More than 75% of them are buying standalone houses, the highest share since 2020. They're capitalising on lower interest rates that have dropped 170 to 200 basis points, saving them approximately $800 per month on mortgage costs. But there's a darker undercurrent to this story. Whilst first home buyers celebrate their entry into the market, thousands of existing homeowners are discovering they can no longer insure their properties. Tower insurance has redlined properties in flood zones and high-risk areas. Others face premiums that have doubled or tripled overnight. And here's the kicker: if you can't get insurance, you can't get a mortgage. If you already have a mortgage and lose your insurance, you could be in breach of your loan agreement, even if you've never missed a payment. So while some first home buyers are rushing in to grab what they see as bargains, others are discovering too late that the property they've signed an unconditional agreement for is uninsurable. They're contractually obligated to settle, but they can't get finance. The New Zealand property market isn't just hitting bottom, it's splitting into 2 distinct markets: insurable properties that first home buyers are competing for, and climate risk properties that are becoming increasingly toxic assets. Welcome to Kiwi Property Reports. I'm bringing you critical analysis of the surge in first home buyer activity and what it reveals about where New Zealand's property market is heading in 2026. This isn't just a feel-good story about young Kiwis finally getting onto the property ladder. This is about a fundamental shift in market dynamics, where affordability has improved to levels we haven't seen in a decade, but where new risks around insurance and climate change are creating winners and losers. Today, we're going to unpack 3 critical elements. First, the hard data on first home buyer activity: who's buying, what they're paying, and why numbers are surging. Second, the affordability breakthrough that's making this possible, and how it compares to the peak years. And third, the emerging insurance crisis that's creating a 2-tier market, and what first home buyers need to know to avoid becoming collateral damage. Whether you're a first home buyer, an existing owner, or an investor, this story has profound implications for your strategy. Let's break it down. According to the latest Reserve Bank data, first home buyer activity has been climbing steadily. In October 2025, 2,765 first home buyers took out mortgages. the most in any single month since November last year. That's the third consecutive month of increases. But it's not just the absolute numbers that matter, it's their market share. From January to April 2025, first home buyers made up nearly 25% of all property purchases. Compare that to the long-term average of 21 to 22%, and you can see they're well above historical norms. What are they paying? Interest.co.nz estimates the average first home buyer price at $673,349 in October, up from $654,601 in July. That's 3 consecutive months of increases. To put that in context, it's still down almost $44,000 from the April 2022 peak of $717,724. But the direction is clear. Prices are rising for first home buyers, even as the broader market remains soft. The median price first home buyers are targeting? Around $700,000 according to the Cotality Westpac report. Interestingly, that's unchanged from 2024, but down from the 2022 peak of $719,000. Their mortgage sizes are climbing too. The average mortgage approved to first home buyers hit $565,280 in October, up from $547,813 in July. That's also below the May 2022 peak of $595,398, but it's moving in the same upward direction as prices. One interesting trend: low equity lending. This is where borrowers have less than a 20% deposit. It increased steadily for most of 2024, rising from 28.9% of mortgage approvals in December last year to 38.4% in August. But then it dropped back, 37.7% in September and 37.3% in October. What's behind that decline? Possibly tighter lending standards from banks, or perhaps first home buyers waiting longer to accumulate bigger deposits. Here's what's really changed. First home buyers are getting older and more strategic. The Cotality Westpac report reveals the average age of first home buyers nationally is now approximately 36 years old.
Well, now it's jumped to 36. That's the oldest age of an average first-time home buyer on record.
That's up from 34 in 2019, an increase of 2 to 3 years. Break it down by city and the pattern holds. Auckland first home buyers average 37 years old, Wellington 36 and Christchurch 35. All are 2 to 3 years older than 2019. Westpac senior economist Satish Ranchhod explains, this shift partly reflects conscious lifestyle choices, such as traveling, building careers, or starting families. But housing affordability remains a key factor. Even with prices well below their 2022 peak, getting onto the property ladder still takes time, especially in larger centres like Auckland, where prices tend to be higher. These older buyers bring advantages. They're further along in their careers, earning higher incomes, they've had more time to accumulate deposits, many have accessed their Kiwi saver, and crucially, they're more likely to have children when they buy, which influences the type of homes they target. More than 75% of first home buyers are purchasing standalone houses, the highest share since 2020. That's a significant shift from apartments or townhouses. They want space, backyards, and family-friendly neighborhoods. Kelvin Davidson, chief property economist at Cotality, notes, they're capitalizing on their ability to tap into Kiwi saver, abundant listings, modest price growth, and accessible finance to secure better homes in many cases. Making full use of the low deposit lending allowances at the banks is another support for first home buyers. With fewer working years ahead to pay down borrowing, these older buyers face a tighter timeline. But the benefits of higher income and larger deposits appear to outweigh that concern. Here's the real story behind the first home buyer surge. New Zealand's housing market has become the most affordable it's been in a decade. According to analysis by Justin Farbo at Antipodean Macro, New Zealand's median house price to income ratio has fallen to a decade low. We haven't seen housing this affordable relative to incomes since the mid-2010s. But it's not just about sticker prices. Mortgage repayment affordability has also improved to its best level in more than a decade. This matters because it's one thing to afford the deposit. It's another to service the ongoing loan. The big driver? Interest rates. They've dropped 170 to 200 basis points over the past year. For the average first home buyer purchasing a $700,000 property, That translates to approximately $800 per month in savings on mortgage costs. Satish Ranchod puts it simply, the big drop in interest rates over the past year has been a key factor that's helped more New Zealanders into their first home. Let's put this in perspective. House prices nationally are down 15% from the 2021 peak in nominal terms. But adjusted for inflation, they've fallen 31.3% from their late 2021 peak. This is the deepest real terms correction in modern New Zealand housing history. Real housing prices have fallen back to late 2019 levels, according to REIN's data. The speculative frenzy of the pandemic era has been completely unwound. For first home buyers who spent years watching prices rocket away from them, this represents a genuine opportunity. The combination of lower prices, lower interest rates, and improved affordability is creating the most accessible entry point into the market that we've seen in years. Kelvin Davidson from Catality notes, first, home buyers are capitalising on abundant listings. And there are abundant listings. Stock on the market remains at elevated levels, giving buyers choice and negotiating power. But here's the critical question. Has the market actually bottomed? The data is mixed. On one hand, first home buyers are clearly seeing value and rushing in. On the other hand, prices are still falling in many areas. According to QV data from September 2025, national home values declined another 0.8% over the August quarter. Prices nationally are tracking 13.4% below the January 2022 peak. Wellington is close to 30% below peak, Auckland around 20% below. The REIN's house price index fell 0.3% over 2 months in late 2025, with economists describing it as renewed weakness after a brief stabilization earlier in the year. Compared to May 2025, house prices are down more than 1.2%. Home sales were weak in November, declining 4.8%. November also marked the first notable annual decrease in sales volume since June 2024, falling 5.7% from a year ago. ANZ economists noted that sales volumes have slipped below long-run seasonal averages and that the usual spring rebound failed to materialize. That's significant. Spring is traditionally the strongest season for property sales. The supply side continues to strengthen. New listings crept up for the third consecutive month, and the stock overhang remains at a decade high. That's putting downward pressure on prices. So what's going on? Why are first home buyers flooding in whilst prices continue to fall? Andrea Rush from QV explains, the weak labour market and slow population growth remain the key factors constraining any improvement in demand, whereas the supply of housing remains high and continues to exceed demand. In other words, the broader market is still soft. But first home buyers, with their improved affordability and ability to access low deposit lending, are acting on opportunity whilst others hesitate. They're bottom fishing. Now here's where this story takes a darker turn. Whilst first home buyers celebrate improved affordability, an insurance crisis is quietly reshaping the property market. Led by tower insurance, insurers are redlining thousands of at-risk properties in flood zones, inundation areas, and locations at risk of erosion or landslips. Some homeowners are facing premiums that have doubled or tripled. Others are being denied insurance outright. And here's the critical link. If you can't get insurance, you can't get a mortgage. Tina Huang, a director of Queen City Law and convener of the Law Association's Property Law Committee, warns that many property lawyers haven't yet fully grasped the insurance issue. But existing homeowners are being caught by surprise. They receive a letter from their insurer saying it won't renew their policy, or that premiums will double, triple, or more to match current and future risk. For those with mortgages, this is potentially disastrous. Loan agreements require homeowners to insure the property. If insurance is denied or cancelled, they could be in breach of their loan agreement, even if they've never missed a mortgage payment. Jessica Palleray, Executive Director of Lawyers for Climate Action, says, sometimes this issue is shrugged off as though it's just seaside backs at risk, but in some cases, it's entire communities. The financial impacts could be just devastating. The scale is significant. According to a 2025 NIWA and Deep South Challenge report, about 700,000 New Zealanders and more than 411,000 buildings valued at $135 billion are exposed to river flooding during extreme weather events. An additional 72,000 New Zealanders and approximately 50,000 buildings worth $12.5 billion are exposed to present-day extreme coastal flooding. Here's where first home buyers need to be extremely careful. Some are signing sale and purchase agreements conditional only on securing satisfactory finance and an acceptable building report, with little or no thought given to whether they can get insurance. It's only when they apply for a mortgage that some would-be buyers discover the property is on an insurer's red-lined list. Because they can't get insurance, they can't get a mortgage. But with no insurance condition in their agreement, they're still contractually obligated to settle on the purchase. If it's a vendor's market, purchasers often have an unconditional agreement or a very limited conditional agreement with no room to review the insurance issue. She recommends prudent lawyers advise clients first on whether the property is insurable, and secondly, whether the premium is acceptable. But in a hot market, or when buyers are desperate to secure a property, these protections sometimes disappear. One Wellington professional and her husband found their dream home in Thorndon in June, but were shocked when Tower refused to cover the property, which sat in a floodplain. They initially thought they'd insure with AA insurance instead, but then realized the implications if that insurer decided to adopt risk-based pricing in future. Tower says 90% of its customers are paying less proportionately for insurance than before its risk rating changes. But that's no comfort to homeowners who find their property is now uninsurable. To check if a property is affected, buyers can enter the address into Tower's website search bar. If uninsurable, a message may appear. We're sorry. The details you've given mean that we're currently unable to offer you cover. Many red-lined properties are currently on the market, being promoted to unsuspecting buyers by real estate agents who in many cases have no idea about the property's climate and insurance risk. So if you're a first home buyer, what do you need to do to protect yourself? First, always include an insurance condition in your sale and purchase agreement. Make it conditional on securing insurance at an acceptable premium level. Second, check the property's risk status before you make an offer. Use the Natural Hazards Commission portal at naturalhazards.gov.nz to check flood maps, landslip zones, and previous insurance claims. Tower's website also allows you to check if a property is insurable. Third, review the LIM report carefully. Look for any mentions of flooding, inundation, erosion, or landslip risks. But remember, there's no warning label on the LIM that says you might lose your insurance in 5 years.
A rise in interest rates could actually hurt serviceability for lower income households, benefiting higher income households who are trying to take advantage of the 5% deposit scheme.
Tina Huang notes, recently we've acted for a number of first home buyers who are just scraping through, really counting every dollar in KiwiSaver. Then if they find out the insurance premium is going to double or triple, it's going to be a big struggle. The insurance crisis is creating a two-tier property market. Properties with clean insurance profiles are attracting first home buyer competition. Properties with climate risk or insurance issues are becoming toxic assets that may only be saleable to cash buyers at steep discounts.
First-time buyers, first home buyers are having a bit of a moment at the moment. Windows open for them to get into the market while the prices are relatively more affordable.
Let's bring this all together. First home buyers are flooding back into New Zealand's property market. October 2025 saw 2,765 first home buyer mortgages, the highest since November last year. They're making up 25% of all property purchases, well above the historical average. They're paying more and borrowing more, but still well below 2022 peak levels. The average age has risen to 36 nationally, and more than 75% are buying standalone houses. New Zealand's housing market has become the most affordable it's been in a decade. House price to income ratios are at decade lows. Mortgage serviceability is at its best level in over 10 years. Interest rates have dropped 170 to 200 basis points, saving buyers approximately $800 per month. Real house prices have fallen 31.3% from their 2021 peak, the biggest crash in modern history. For first home buyers who waited years, this is their opportunity. But a hidden threat is emerging. The insurance crisis is creating a two-tier market. Properties in flood zones or high climate risk areas are being redlined or facing unaffordable premiums. First home buyers without insurance conditions in their contracts are discovering too late they can't get finance. The message for first home buyers: yes, affordability has improved dramatically. Yes, this may be the best entry point in a decade. But do your homework on insurance before you commit. If you found this analysis helpful, hit that like button and subscribe to Kiwi Property Reports for comprehensive coverage of New Zealand's property market, first home buyer trends, and emerging risks. Drop a comment below. Are you a first home buyer entering the market now? Have you encountered insurance issues? What's your strategy? And remember, in property markets, opportunity and risk often arrive together. The smart buyers are those who can see both clearly. Thanks for watching. I'll see you in the next report.